أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome back to our chapter 16 lectures. Let's just jump into it. We were in the middle of discussing the substantive procedures, so we'll pick up from that, and then we have some other miscellaneous items to discuss in the remaining of the chapter. So the next management assertion we're going to check is cutoff. And here what we have to do is for cash receipts and for cash disbursements. So for cash receipts, we have to compare the dates for recording a sample of cash receipts transactions in the cash receipts journal with the dates the cash were deposited in the bank. And we need to notice any significant delays. What does that mean? The cash we get from the customers, or our client gets from the customers, are deposited, let's say, on a daily basis. But at the end of the year, if the last day of the year is around the weekend, then the deposit for the last 2-3 days may not be credited by the bank because the bank is closed. So what we need to do is get something called a cutoff bank statement. So what we need to do is get a bank statement for the first 7 to 10 days of January, and that is called a cutoff bank statement. And we need to see whether the deposits and transits are clearing the bank during those first few days. What does that mean? What does a cutoff bank statement look like? Here is a cutoff bank statement. Normally, the bank statements are for the whole month, and they come at the beginning of the following month. So let's say you have the month of November bank statement. It will come to your client at the beginning of December. The December's bank statement is going to be for the whole month of December, and it's going to come to your client at the beginning of November. January's bank statement is going to come to your client at the beginning of February, but you don't want to wait until then. You want a cutoff bank statement. This is a cutoff bank statement. As you see, the bank statement shows transactions. This is from the bank of your client. It shows the items that the bank has recorded between January 1st and January 7th. So you see that these are only for 7 days. So if you go back to your client's bank reconciliation, if you remember, the bank reconciliation matches the balance between the bank statement and the balance in the books in the general ledger of the client. And on the right side, you see some deposits in transit. Do you see that? Are you looking at the deposits in transit? My icon, my cursor is in the deposit in transit. Do you see that? Are you there? Okay. The client deposited this money on December 29th, Thursday, but they deposited it after the bank had closed. They have a deposit from Friday and Saturday, all 3 days, the bank is closed. So they have recorded this in their cash receipts journal. But you cannot confirm that on the bank statement because the bank did not give them credit. Where can you confirm this? You can confirm this in the cutoff bank statement. So if we go to the cutoff bank statement, this is the cutoff bank statement, and I put the deposits and transits here so that you can compare. These were from the last month's bank reconciliation. If I get a cutoff bank statement from the bank, I'm going to see these 3 deposits are credited the very day the bank opens. So the 1st of January, let's say on Sunday the bank opens, you have 11,000, 6,000, and 3,000. Do you see that? They match the deposits in transit. Do you follow? Right? So we can be now comfortable, we can be sure that these items were recorded in the right period, right? Because they were deposited in December, but the bank did not give them credit until January 1st, and that is fine as long as they give them credit after they open, because the sale is from December and it's recorded in December and it's fine. Okay, so here, going back to our management assertion, observe cash on hand for the last day of the year and trace deposits to cash receipts journal and cut off bank statement. So we want to make sure that these deposits from the cash receipts journal are actually in the cut off bank statement. Remember the cash receipts journal I showed you in our previous class, it lists every single amount that was deposited. All right. Then we go to the cash disbursement. Compare the dates for a sample of checks with the dates the checks cleared the bank. Note any significant delays. Record the last check issued on the last day of the year and trace the cash disbursement. Trace the cash disbursement journal. So what we have, let's talk about the second point first and we'll go back to the first one. Let's say the last check your client dated in December was check number 1075. Check number 1075 is dated December 31st. Check number 1076 is dated January 1st of the next year. You need to find this last check in the cash disbursement journal. Remember the cash disbursement journal I showed you in our previous class. The cash disbursement journal shows every single amount that is disbursed or paid. If we have the last check that they wrote in the cash disbursement journal, that gives us some assurance that all the checks written before that check were also recorded. Does that make sense? If you ensure the last check is recorded, then most likely the checks before that were also recorded. Does that make sense? Okay, now this first point, going back here, you see the same issue. We have a number of checks that are outstanding. So the client wrote these checks to, let's say, suppliers, December 23rd, 4th, 6th, 28th, 31st, you know, all these check numbers, 77, 8, 9, 79, 81, 82. These checks did not clear the bank. If I get a bank statement, cut-off bank statement, remember the terminology, cut-off bank statement. So don't be surprised or don't act as if it's not familiar to you. Make sure you know the cut-off bank statement is the bank statement which covers the first 7 or 10 days of the new year, okay, of the following year. So if these checks did not clear the bank in the year of audit, you're auditing until December 31st, you can look at the cut-off bank statement and you can see whether these checks are clearing. So we have 1077, 1078, 1079, and 1082 clearing the bank. But this 1081 did not clear the bank. So the question we have in our mind, the question mark is this check real or bogus? How can we check that? What other ways can we check? Let's say this is written to a supplier. How can we check? What supporting documents can we look at? Let's see if you can think through this. What supporting documents can we look at to make sure that this check is supported with voucher packet? Excellent. That is the right answer. Very good. So voucher packet, what do we have in the voucher packet? What do we have in the voucher packet? What is inside the voucher packet? How many documents? And what are those documents? Purchase order, then receiving report, then very good. In this order, the purchase order comes first, the receiving report comes next, invoice comes after that. The receiving report and invoice can come together the same day. The client could have received an invoice with the delivery. It is possible, but they cannot be before purchase order. So when you're investigating, when you are an auditor, remember you're an investigator, you're a detective, you want to make sure that these details are in line, because if they made up something, they may have made a mistake in those dates. Okay, so if you have a voucher packet that says that a purchase was made from supplier XYZ for the amount of 3,900 and the payment is for 3,900, everything is beautiful and you can move on. Does that make sense? Are you understanding? Are you getting the gist of it? Okay, next management assertion we're going to check is classification. We examine a sample of remittance advices for proper account classification. Now, let me see if you remember. Remittance advice. How will you describe a remittance advice? What is a remittance advice? I showed you one last class, during our last class. What is a remittance advice? Remittance advice. That is correct. But what it is? What is it? I told you in plain English, a remittance advice is something of something. Remittance advice is something of something. Something of something. Notification of something. What is that? Notification of, notification of. Remittance advice is notification of payment. Very good. That's what it is. Notification of payment. So if you received a payment, if your client received a payment from the customer, there is a remittance advice. You want to take a sample of the remittance advices and you want to make sure that it is classified in the right accounts, in the right expense account and in the right subsidiary account. So for every customer, your client has a subsidiary what account? Your customer client has a subsidiary account for every single customer. What is that subsidiary account called? A subsidiary what account? Every single customer has a subsidiary accounts receivable. Very good, outstanding. So you want to make sure that the customer that you received, the client received the remittance advice from is recorded in that one particular accounts receivable account. Is that clear? I showed you financial statements with subsidiary accounts before, remember? South Supermarket and West Supermarket and Red Supermarket, everyone had an accounts receivable. Do you remember? Yeah, so they are posted. Same works for the disbursements. You have a set of canceled checks, and you want to take the canceled checks and you want to make sure that they are recorded in the right accounts, right expense accounts, and in the right subsidiary account for your supplier. So every single supplier has a subsidiary what account? Every single supplier has a subsidiary. What is the account? What is the account? Accounts payable. Very good. Now, let me see if you remember or understand the cancel check business. If your client wrote the check, the cancel check you have is the check that your client wrote. Whose authorized signature would be on the check? Whose authorized signature would be on the check? If your client paid the supplier, whose authorized signature is on the check? Clients, right? What happened to everybody else? Sharat is answering continuously. Nobody else is there. Where are you guys? Okay, Hamza. Where is the authorized signature, front or back? The authorized signature is on the front of the check or the back of the check? Front, very good. Front, very good. I have a question from Sharat. It says, when we say roll the check, it means issued the check. I have not heard that expression, roll the check. This is something new to me. Maybe it's local. Okay. No, you may have. There may be this lingo. Maybe used, but I have not heard of it. Anyhow, but I haven't worked in an accounting office in Qatar myself, so all my language is so forth, and language and so forth is from my experience in the U.S. accounting firm. Okay, now the back of the check. What do we have in the back of the check? Once the supplier gets the check, what do we have in the back of the check before the check is deposited? What do we call that? What do we call what is in the back of the check? Remember, we spent some time talking about this. In the back of the check, before the check is deposited, what is there? What do we call that? It starts with an E. Anyone? No one? Endorsement. Muhammad Al-Sada. Very good. Sharat. Endorsement, right? Endorsement. 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 If I wrote the check, if the client wrote the check to the supplier, who endorsed the check? Whose endorsement is at the back of the check? Whose endorsement is at the back of the check? Come on, quickly. Whose endorsement is at the back of the check? The supplier. Very good. So we want to make sure that those things are also fine. So you understand the cash disbursement classification check. Now we come to the next set of substantive procedures. They are related to balances. The three assertions we check are existence, which is the cash actually there? Is it real? Number two, completeness, everything was recorded correctly. And number three, valuation and allocation. Now the value of the cash is the value of the cash, but there is something called cash equivalent and also some other matters that are related to cash and restrictions to cash. And we're going to discuss this in just a few minutes. The procedure we perform to test these assertions are, first of all, confirmation. So what is a confirmation? We send a confirmation letter to every single bank account, every single bank, to ensure that the bank has in their records the same amount of money that the client has recorded. You can get this information from the bank statement itself, but this is an extra layer. If there is something fishy going on, we get this letter directly from the bank. So what does this letter say? You write it to the bank manager, let's say, of ABC Bank, New City, Good Country, subject request for balance confirmation. Dear Mr. Manager, we are performing the external financial audit of XYZ company for year ending 2000XX. We request that you complete the bottom part of this letter and provide us with the year-end cash balance of XYZ company. With kind regards, Khalid Ali, Audit Manager, Adam Associates, New City, Good Country. So you write this letter, and the letter comes back from the manager. It says, I confirm that the year-end cash balance of XYZ company as per the record of the ABC Bank was $300,000. And the signature and the title. So what is the name of the manager? What is the name of the manager at the bank? Adam, the name of the manager at the bank. Look carefully. Hassan. It is Hassan. The name is Hassan Ahmad. Okay. The bank's manager's name is Hassan Ahmad. Okay. The Hassan Ahmad is confirming that the client has the amount 300,000. So we will go back to the bank reconciliation or the general ledger, and we will find that it matches the bank statement balance, which is 300,000. As you see, cash balance as per bank statement December 31st. So the bank statement that they gave us also shows 300,000, and the bank also confirmed 300,000. So everything is fine. We have no problem. The second thing we have is test of bank reconciliation. So there are certain things we do with the bank reconciliation, which we are going to discuss in a couple of minutes. And the third thing is procedures for high control risk or suspected fraud. This we're going to discuss in our next class. So test of bank reconciliation. What do we do with the bank reconciliation? First, so the first thing we already discussed, confirm balance with bank for each account. We send a letter to every single bank, and for every single bank, if they have multiple bank accounts, we ask the bank to confirm whether they have or how much they had at the end of the year. And if that matches the bank statement the client supplied, then everything is fine. Test of bank reconciliation for each account. Foot the reconciliation and the outstanding check listing. What does this mean? What does this procedure mean? We go to the bank reconciliation, and we are going to check whether the client has done the bank reconciliation correctly. So footing means we add these outstanding checks, 9,000, 7,000. If we add all of them and it adds up to 50,000, then that is beautiful. That is fine. This 50,000 also should be transferred here. So whatever the bank statement shows, plus the deposits in transit, minus the outstanding checks, should equal to the adjusted cash balance, right? So this 50,000 should match the outstanding checks. Are you following? So what we are doing is we are checking the calculations in the bank reconciliation. Are you following? The next thing we do is trace balances per book to the general ledger. So we want to make sure that the book balance they have in the bank reconciliation matches the balance in the general ledger. Now, if we come to here, if we come to the bank reconciliation, tell me what number should I see in the general ledger to be satisfied that this bank reconciliation was completed correctly and all adjustments have been made to the book. What number should I see in the general ledger? What should be the cash balance in the general ledger? Let me see if we have an accounting expert here. Faisal says 270,000. Hamza says 270,000. Anyone else has a different opinion? Okay, Faisal and Hamza, Both of you are correct. Excellent. Outstanding. You are the champions. 270,000. This is what we should have in the general ledger. If we find this number in the general ledger, we are happy. Okay? We are happy as auditors. Now, the next step is obtain standard bank confirmation and trace balance per bank to the bank reconciliation. We already did that, getting a bank confirmation for every single account, okay? And make sure that that number matches what the client has. Obtain a cutoff bank statement. I showed you what a cutoff bank statement is, the first 7 to 10 days. And then trace deposits in transits, outstanding checks, and other reconciliation items to the cutoff statement. So we already did this, right? The deposits we saw going into the bank in the cutoff bank statement, and the checks we saw going into the cutoff bank statement. Is that right? Do you remember this? We did this earlier today. Do you remember this? Looking at the cutoff bank statement? Okay. So these are the tests of bank reconciliation. Now, the next step is to see if the control risk is high or if there is fraud suspected. So if you feel that the control risk is high, the controls are not that good, and you smell fraud, then you can do number one, perform extended bank reconciliation procedures. Do even more careful, more detailed observation of the bank reconciliation. Perform something called a proof of cash. Now, these two things, they are not done on a regular basis. And you may have an audit career and you may never do this because you may never suspect fraud in your client's transactions. Just know that there is something called proof of cash, and if you ever have to do it, then you will learn how to do that, inshallah. And then there is also something called test for kiting. Kiting is a particular type of fraud, and I'm going to discuss this in our next class. I will expose you. Again, this is something that you may never see, inshallah, hopefully in your audit career if you work as an auditor, but I will expose you to the idea what it is. I have never experienced any of these things because these are special cases. So I don't know if this is something that you will ever experience because it's not common, but nonetheless, you should know that this is there. And then if it ever comes up, this is not going to be something totally unknown to you. All right? I will explain the kiting to you a little bit in our next class. So far, so good. Are you with me? Are you satisfied? Are you following? Okay. Now, the last set of substantive procedures are about disclosures. So as auditors, you want to see that certain things that are not possible to report on the balance sheet itself are disclosed in the footnote disclosures. The first thing is accounting policy for defining cash and cash equivalents. Now, cash is cash. There is nothing to define. Cash is cash. But cash equivalents, if you remember from our last class, could be a number of different things that can be converted into cash without losing much value and quickly. So you can turn it into cash. If you have an asset that is 1 million reals, it can be converted into very close to 1 million reals very quickly. What are those things in your client's books? They should be defined. Are they stocks? Are they bonds? Are they other assets? They should be defined clearly. Is that clear? You want to look at the footnotes and you want to make sure that it's defined, it's disclosed. The second thing is restrictions on cash such as sinking fund or special purpose allocation. What does that mean? Your client may have 15 million reals in the bank, but 5 million of those reals have been promised as a donation to a particular charity, or it may have been reserved to build a building, let's say. If this is the case, this is called special fund or sinking fund. This should be disclosed in the footnote disclosure, saying that the 5 million reals in this particular account is dedicated for this particular purpose. So the reader of the financial statement would know that although they have 15 million reals, all of this is not available to pay off loans or conduct other business. It is restricted. 5 million reals are restricted for a particular purpose. Is that clear? Restrictions. The next is contractual obligations to maintain compensating balance. So your client may do business with a particular company, maybe an overseas company, or maybe a particular government overseas, and they may say that to do business with us, you must maintain a minimum balance in your bank account. So let's say the minimum balance is $10 million or 10 million reals. You must have 10 million reals in the bank to do business with us. Although your client may have 15 million reals in the bank, 10 millions they cannot use. They must keep that in the bank. So this information must be disclosed. So the reader of the financial statement knows that 15 million reals is not for them to use for anything. 10 millions must be kept at the bank. Is that clear? Number 4, cash balance is restricted by foreign exchange controls. Now here, foreign exchange controls, if your client does business with foreign companies or in other countries importing and exporting, and they may do business in multiple currencies, and because foreign currencies fluctuate, so if you do this, your client does business with, your client is in Qatar and they do business with a company in Europe with euros, they deal with euros, and they do another business with another company in China and they do business in yens. $1 or one real may fluctuate against the euro or against the yen, for example. If these fluctuations are there, the foreign exchange control may say that your client's business must have a particular amount in the bank to deal with these fluctuations. And this must be disclosed in the footnote disclosure, saying that we have a restriction on cash because of foreign transactions, and this is how much we must keep in the bank. Is that clear? So these are similar restrictions, but they have to be disclosed so that the reader of the financial statement knows exactly what is restricted and what is not. Clear? Okay. The next and the last item is letters of credit. So pay very close attention to me when I explain the letters of credit. It's not complicated, but to understand this, you need to follow the story that I'm telling you. Okay, are you with me? Let's say Muhammad Nasr and Ali Al-Khuzai and Sharad Gopakapoor come together and they form a business, or Sharad Gopakumar, I'm sorry, form a business, form a company, and you're going to make ice cream. So to make ice cream, you need an ice cream making machine. So you're going to buy this from a foreign country. So which country are you going to buy this machine from? I have a country in mind. Let's see if you can guess which that country is. Going to buy a machine that will make ice cream from what country? China. Exactly. This is exactly what I had in mind. I had China in mind, Ali. I'm sorry. Turkey, do they even make these machines? I don't know. But China makes machines. I went to a trade fair one time, a Chinese trade fair, not in Qatar, in another country, where I saw many different machines that they brought uh, of manufacturing different things, right? And I was amazed, making containers, those small food containers, and the bags where you sell rice, and many other things, business cards. I mean, these machines are automated, and they're there in that particular exhibition spot, and they set it up very quickly, and the machines are actually producing those things. You can see them, right? So it was amazing, right? It was amazing. I saw those machines, and Sharat has a poem here. It says, "China makes, world takes." Very good. Like the coronavirus, right? Anyhow, so we have Muhammad Nasser and Ali Al Khuzai and Sharat Gopakumar going to China to buy this machine. Okay? I know you don't want to go there right now, but let's say after Corona, you go to China and you want to buy this machine. So you three go into this company and they have ice cream making machines, and you say, okay, this is very beautiful. We want to buy this. How much? 1 million riyals. Said, okay, no problem. Give us 1 million riyals and take the machine. So you say, no, you deliver the machine, you set up in your factory. If the machine runs, we'll give you a down payment, let's say 50,000 riyals or 100,000 riyals, but not 1 million. We'll give you the rest of the money when you bring the machine and you set it up and you expert set it up and it runs properly for a month and so forth. We'll give you the rest of the money. They said, no problem, bring a letter of credit. What is the letter of credit? You have to go to a Chinese bank that is in China, and you have to open an account there. That bank will communicate with your bank in Qatar. Let's say you have a bank account in QNB, Qatar National Bank, and you have 1 million riyals there. The Chinese bank will communicate with Qatar National Bank and make sure that you have a valid business, you have a valid account, and you have the money in the account. So far, so good? You are following? Ali and Muhammad Nasser, you're doing business, you follow? So you do that. You open the bank in the Chinese bank. You open the account. The Chinese bank communicates with QNB, and the Chinese bank writes a letter to that company in China saying that Shad Gopakumar and Ali Al Khuzai and Muhammad Nasser has a company, and they will pay this money. They will pay this money if you sell them the machine. So they sell you the machine and you then pay the money. But in case you didn't pay the money, that Chinese bank will pay the seller. And that Chinese bank will take the money from QNB. So this authorization is there. The Chinese bank will then take the money from QNB, and then QNB will come after you. They will take the money from you. Do you follow? So that company in China does not have to come after you individually if you never pay. They have a line, they have a channel that they have created where if you don't pay, proper action will be taken. So this letter that the Chinese bank is giving to the Chinese company is called a letter of credit. If your client has something like that, it must be disclosed in the footnote disclosure. Is that clear? Okay. So this is called letter of credit. Right. So QNB, you understand, just like you sitting here and selling somebody to someone in a foreign country, they're bringing a letter from a foreign bank is not as good to you as if QNB gave you that letter. Because you know QNB and you are comfortable with QNB, and QNB you know will pay. So they want this from a local bank. You follow? So they want this from a local bank. Your local bank, their local bank will communicate with your bank here, right? So this is all through reputable channels. So they know, that QNB will guarantee that, okay, yeah, we have given them a loan and they have paid us the loan and they do have a valid company. They're actually making ice cream. It's not something bogus. They're not just taking the machine, and so forth. So this is called credibility. It gives you credit for what you're doing. You have, and then again, If you buy something more from that company in the future and you have made the payment properly in the previous purchases, you have a reputation with them, then things become easier. You follow? But doing the business for the first time or for big amounts, the letters of credit are needed. Is that clear? Okay, so I hope I am able to convey to you the the message. If QNB, Ali, is in the local uh, economy, if they have it locally, and if your seller trusts QNB, then no problem. Remember, your seller, the company that you're buying from, may say that you cannot just go to any Chinese bank. You have to go to this one particular bank where we have an account. Then you have to go there. So they will decide from where they will accept the letter of credit. You cannot just argue that I will bring it from this such and such bank. Okay? Otherwise, they will not sell it to you. So they will decide. The China may have 100 banks, but they might say, you can go to in one of these two banks. So you have to go there. Is that clear? And that bank may require you to put some money in their account first. So, these requirements you have to fulfill if you're going to buy from China. Clear? Okay. So I hope I am able to convey to you some details with some, good examples. So these things are clear in your mind, how it works in the real world, and you just don't have book knowledge. Okay. And we will test this when we do the simulation. And I gave you a simulation. I don't know if any one of you have done that. If you were face to face, I would have implemented that in class, but sadly we are not face to face, and I am missing out on interacting with you, and you're missing out on interacting with me. But we will try to make the best out of the situation, inshallah, and my goal is to get you out of here while you have a good amount of knowledge. Okay. So letter of credit is issued, the amount is frozen in your account. Not necessarily frozen. It all depends on Sharat, your history and your reputation, and what company. For example, let's say you're a big company like Baladna and you have purchased different things from different countries before, etc., etc. Your situation is going to be different than a new company who has never purchased anything from a foreign country. Okay. So a situation to situation, if the bank's manager is your business knows you for some time and has given you loan and so forth, knows is familiar with your business transactions and so forth, things will be different for you. So it all boils down to your reputation in the market. So it takes a long time to build reputation in the market, and it is also difficult to keep the reputation, right? If you do misconduct, if you do unfaithful transactions, you don't keep your promise, you don't pay on time, etc., etc., then all of this has negative effect. Okay. All right, we'll end here, inshallah, and I will see you, inshallah, on Thursday. Assalamu alaikum wa rahmatullahi wa